bonds, government bonds, must buy bonds. Bloomberg came out with this article a couple days ago that this year alone, the major central banks have already done 5.6 trillion officially on balance sheet of quantitative easing, and the majority of those purchases were done to purchase bonds, specifically government bonds, although corporate bonds are also a problem. The Bank of International Settlements is warning that this crisis is about to turn from a liquidity crisis into a solvency or bankruptcy crisis because of the global cash flow problem that I've been warning about. This is the risk you have when you issue more debt with an already too large debt problem, and this fiat currency and credit Ponzi scheme keeps growing. And now we're over 270 trillion in total debt at all levels of society. The size of government is maintained or is slated to grow, as in the case here of the US. And that means more government bonds. So this week, we've already had Japan announce a new 73 trillion yen, or about $700 billion bailout and stimulus package. There's probably going to be more government spending there. The European Central Bank should be announcing a new bond buying program. According to this, it's slated to be approximately 500 billion euros, or about $605 billion. So it's just going to get out of control. And we know with the Fed's balance sheet, the Fed's official balance sheet, there is over the next 12 to 18 months between 8 trillion and 10 trillion of US treasuries. A lot of them are very short-term oriented that have to be rolled over, and there is not a lot of demand for those US treasuries, specifically from foreigners. So foreign governments like China, Japan, emerging markets, they are not the buyers of US treasuries that they have been in the past. So unless the banks, the large US banks, and unless the pension funds, who are always the suckers, are going to keep buying the same amount or more, probably even have to buy more US treasuries, then the Federal Reserve is the buyer of last resort of US treasuries. That's why, in my opinion, the Fed and US Treasury are being merged, because things are that bad. So this is all a bond buying scheme. Quantitative easing is to inflate asset prices with the Cantillon effect. And also it's a bond buying scheme to create currency units out of thin air and to buy bonds, mostly government bonds. But also, as we're going to see with this corporate bond bubble, it's going to be corporations too. My friend Daniel Lacalle has been writing articles about this for the Mises Institute for years, about the European Central Bank buying corporate debt in the European Union and how they have zombie companies. Well, now the US is going to have a massive amount of zombie companies. It's already, according to recent articles, around 1.4 trillion with corporate bonds and corporate debt, corporate credit, that can not even service their interest payments. And guess what? Wall Street is still selling more debt, because the Wall Street banks do not care what happens to this a couple of years from now if it blows up, as long as the bank profits, as long as the profits from the bond sales, people are getting rich. And this is something that the Keynesians, the neo-Keynesians, and the deflationists either don't understand or they don't care about. They don't understand why their bond trades on treasuries and others are doing well. And by the way, Stanley Druckenmiller, people have criticized him a couple years ago. Stanley Druckenmiller, and this was, I think, 2018, if I remember correctly. This was actually before the repo crisis. Stanley Druckenmiller said in 2018, this was after Jerome Powell was hiking rates, and then he stopped and things broke. Stanley Druckenmiller said that the U.S. will have to go back to ZIRP, zero interest rate policy, and he was betting on rates going down to zero. Now, I don't know if he still has that trade on, but he's been proven right about how low rates have had to go, because more debt, more credit in this global fiat currency and credit Ponzi scheme. All these large banks, whether it's in the US, in Europe, in Japan, in China, keep issuing more debt, keep issuing more credit. The size of government stays the same or grows, and the central banks are pretty much all across the board monetizing debt. But it's to fight deflation. So they're helping us out, of course. I'm being sarcastic. The average person on Main Street is getting no benefit from this, is just getting screwed. The average Joe and Jane, the average small business owner, is just getting screwed so many different ways, I've lost count. And the consumer price index is total BS. All these government statistics are. All these governments are lying to different degrees about GDP, inflation, unemployment. It's all a lie. But they have to stagflate, tax, lie, and they have to create currency units to maintain the size of government and to promote this illusion. They have to create currency units out of thin air to buy up bonds. And this scheme is going to continue. And they're going to tell us it's going to fight deflation. There is no inflation. And this bond buying scheme that a lot of financial professionals either don't understand or won't publicly admit or don't care because their bond trades are making them lots of money off newly created currency units to monetize that debt, and the central banks are loading it onto their balance sheets. So this is going to get out of control. All these central banks are out of control. It's not just the Fed. Bank of Japan is doing it too. The European Central Bank is doing it too. I've been covering this now for over a month about all these other governments, whether it's the Reserve Bank of Australia, for Australia, New Zealand, India. They're all creating currency units out of thin air to try to devalue their own currency against the dollar and to buy up government bonds so they maintain the size of government for a bunch of different reasons, mostly to maintain the size of government and to fight deflation, because there's no shared sacrifice here. Our overlords, these politicians and bureaucrats that are shutting down the economy, saying that responsible business owners, small business owners, can't protect their customers and their employees, they're not getting any sacrifices. I hardly see any press releases saying any of these politicians or bureaucrats are getting any pay cuts. Meanwhile, the real economy is being destroyed and asset prices, stocks, bonds, and real estate, desperate to inflate those across the board. This is how perverted and distorted fiat currency and credit are. And the gold price just keeps getting hammered on a weak dollar. But with seasonality, we should see gold price start to perk up as Chinese New Year is coming up February 12th. So there should be, if the Chinese economy is improving, there should be some buying. Although we've had news reports come out that the Chinese government's trying to ban people from buying gold and silver in China. But we know there's always black markets in China, and people in China always figure out ways around those rules, whether it's buying gold and silver, whether it's getting savings out of the country, or it's buying Bitcoin or other cryptocurrency. So it's going to be a very interesting time period going forward. But again, and I've stressed this now for over a month, this is a bond buying scheme. There are many, many financial professionals with 10, 20, 30 years of experience who have more degrees than I do, and they don't understand this. Either they refuse to admit this, or they don't understand this. And they also don't count any asset price inflation in stocks, bonds, and real estate as inflation. It sickens me, because they're making money off their bond trades while these central bankers are creating currency units out of thin air and forcing shrinkflation and stagflation in the real economy. Our bills are going up on food, healthcare insurance, rent before the pandemic, many of these bills on necessities to survive. I'm not counting consumer discretionary items. Some of those consumer discretionary items people don't have income for, and those things are on sale. But these distortions are normal if you study what's happened during the Cantillon effect and other financial crises throughout history. For hundreds of years, when central banks and governments intervene and distort, pervert markets in all different types of ways. Please consider becoming a patron over on my Patreon and chipping in $5 or more per month, so that way I can continue to do my research and make unique content and be able to make a living. Because with my YouTube channel, my Google AdWords revenues have collapsed almost to zero. My YouTube channel subscribers have stopped growing in the last 9 months. There's no growth there. And my live stream shows have been shut down, and YouTube tech support is giving me all types of excuses, claiming that they did not put a strike on my account, even though I can't edit the title for a live stream show. I cannot turn monetization back on. I cannot even turn live chat back on. That's how bad things are with the live stream show. I have almost 150, and hopefully soon it will be over 150 unique pieces of content behind the paywall on Patreon in terms of well-researched articles. Some of the articles have taken me many, many hours to produce for lots of different topics about gold miners, silver miners, precious metal royalty and streaming companies, a lot of articles about the oil industry and other commodity industries, also global macro related articles. There's also audio podcasts on a lot of stock charts and technical analysis there too. And while you are getting unique content, if I go over 1,200 patrons and I stay there, I will sign up for another live streaming service just for patrons. So I will make this pledge, I will make this promise. If I go over 1,200 patrons and I stay there, so if I drop below 1,200 patrons, the promise is not going to stay. I have to stay at 1,200 patrons and stay there. I will start to do live stream shows just for patrons behind the paywall there. Will require additional capital. I will have to sign up. I think it's $100 a month for another service there to integrate with Patreon, to sign up there and integrate. So that will be an additional added bonus for patrons if you want to take me up on that. But please chip in if you can, as YouTube is basically trying to make this impossible for me to grow my channel or to make a living from making content.